Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. Here's your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A second bullish white soldier yesterday as the market followed on higher from Friday's bullish thrusting pattern and reaction back up to reaching the lower time, currently at 103.60 of the late last week of the January to May 2021 bearish Andrews pitchfork. This pitchfork has successfully run the bearish incentive here for a year now. Additionally, we also now have as support the December 2016 low at 103.49 nearby, as well as the January 2017 low at 103.38. Interestingly, we also have the market well in between the upper time, currently at 105.47, and the middle time, currently 101.82 of the steeper and more recent mid-February to end of March bearish Andrews pitchfork. This upper time is helped and abetted, and this is going to be something to really watch out for, by the falling short moving average, currently 105.43. It also leaves last week of April and the first 2 weeks of May as a possible bearish halfway hesitation, but that depended very much on the market breaking the previously mentioned lower time, and that it has not done so for a year now. I'll not place a target below, not just yet, but I will be studying the idea, especially if we close consecutively below this lower time. Now, one other quick point. Overhead, we have the original congestion area, 104.51 to 104.92, and now a separate but related resistance area, recently formed during the last 3 weeks between 104.92 and 105.68. So the key levels are 104.92 to 105.68, and then obviously the short medium moving average at 105.43 right now. So far today, a move higher into the 104.51 to 104.92 area, but slowly. Cable, aka sterling against the US dollar. A second bullish white soldier yesterday, and a suitable follow-on higher to Friday's immediate countering combined key reversal up and bullish engulfing pattern. Prices halted as suspected at the newly built congestion area from last week between 123.22 and 123.37. Beyond this resistance, let's try that again. We have small resistances at 124 even and 124.36, but relatively little of the congestion area between 124.78 and 125.09. And that contains within it the 38.2% Fibonacci line of the March 2020 to June 2021 move at 125.09. Overall, last week's moves lower have been a continuation of the move down from the recent late February to mid-April descending triangle. The initial target X in the 126.55 area had already been achieved for this pattern, and the harder secondary target X1 in the 123.60 area was reached 2 Fridays ago. There is now a possible target X2 below in the 120 even area. This is a potential target for the mid-April to date action being a possible bearish halfway hesitation. Right now this is looking almost unobtainable, and I will review that soon. So far today, a slightly lower open, but then a move up through the congestion, the 123.22 to 123.37 area, as well as the light resistance of 124. It does look right now like the market is cruising through a relatively empty area on its way to the 124.78 to 125.09 resistance area, and it'll be interesting to see what happens when we get there. Euro sterling. An unusual combined key reversal down and inverted hammer pattern yesterday, as well as being a third bearish black crow and a continuing follow-on lower to the recent counter-to-the-counter key reversal down. What was unusual about yesterday's action was not the inverted hammer pattern. No, that was fine. It was the key reversal down happening as it did after a previous session's bearish action, rather than a previous session's bullish action, which one would normally look for. I suppose the key yesterday was closing, as the market managed to close below both the September 2021 to date downtrend, currently at 84.77, and the April 2021 low at 84.70. The first move now means we must put a question mark over the last 2 weeks' bullish action, as at best they have achieved the limited targets on the upside that were set for them, and at worst these will be the only targets that the market will achieve on the upside, and maybe the overall move up was a false break higher from the extended diamond pattern formed since December last year. The answer to which is which. Which is which? Well, that may become evident over the next few days. Anyway, just in case prices turn back up and the smaller lopsided diamond pattern, for the smaller lopsided diamond pattern, we have a primary target X in the 8680 area and a harder secondary target X1 in the 8765 area. For the extended diamond pattern, we have a primary target X2 in the 8715 area and a harder secondary target X3 in the 88 even area. We've already reached the upside target for the bullish halfway hesitation over late April at target X4 in the 8577 area. Now, there is one final pattern, and it is a big one. I've spoken about now for countless days, weeks, and months even. It is the very large falling wedge pattern between 84, 85, and 8097, which was still in operation, but which had fallen into the shadow a little with the diamond patterns. This pattern has also been triggered, and it has the most ambitious target on the upside. Target X5 for this pattern is in the 8865 area. This is a huge ask, but it seems to be the season to give huge asks right now. So far today, well, a move up to the September 2021 to date broken downtrend that also acts as the upper trend line for the extended diamond pattern, followed by a sharp move down through the April 2021 low, then the long moving average, currently 84.43, as well as the upper trend line, the regular diamond pattern, currently at 84.33. We're now in fairly free territory on the downside until the rising short strike medium moving average, currently at 83.89, and the medium moving average, currently 83.76. Closing where we are does make the moves up over the last 2 weeks look like a false break higher. US dollar against the Indian rupee. A bullish opening, white Mariposa yesterday for a new all-time high, open, high, low, and close. Overall prices are still in between the lower time below, currently at 76.72, and the middle time above, currently 78.17, of the mid-January to early April bullish Andrews pitchfork. We still have overhead, target X in the 78.30 area. This is the potential target for the whole of the 2022 action, being a possible bullish halfway hesitation. In between, we have the middle time and the upper trend line, currently at 78.15 of the late August to date ascending, expanding wedge pattern. Now, so far today, a reactionary move back down for lower open and looking right now like a possible combined bearish opening black Mariposa and bearish Harami. May even end up being a pipe top or something similar. US dollar against the Brazilian real. An indecisive doji cross yesterday as the previous session's bearishness just evaporated. And the top side is still capped by the falling medium moving average, currently 510.90. We also have the congestion area formed from last week between 513.13 to 513.73, as well as the interesting 38.2% Fibonacci line of the June 2019 to May 2020 move at 496.58. Prices end up in the small congestion area 505.73 to 510.87. This still leaves the door open for a possible further attempt high. However, there is little support below until the 50% Fibonacci of the October 2019 to May 2020 move at 496.58. And then really nothing until the flatlining short medium moving average, currently 489.82. The way things are going, I may soon be tempted to draw a bearish start of 2022 to date, a bearish Andrews pitchfork. US dollar against the Mexican peso. A third bearish black crow yesterday and a move down to test the week before last's lows around the 20 even area. Topside action is capped by the flatlining short medium moving average, currently at 20.2731, with a further slew of resistances above. These are, and they are in no particular order, the long moving average, currently at 20.4353, the medium moving average, currently 20.3636, the neckline, currently 20.4857, of the September 2021 to March 2022 head and shoulder stop. Then the interesting 61.8% Fibonacci line of the July 2017 to April 2020 move at 20.6062. And finally the upper time, currently at 20.4594, the November 2021 to March 2022 bearish Andrews pitchfork. Additionally, we also have targets X2 in the 2049.60 and X3 in the 2066.05 area. Now, these are not actually resistances, but primary and secondary targets for the late March to late April double bottom pattern. Target X2, the primary target, was achieved 3 weeks ago, but target X3 is becoming slightly more out of reach. Meanwhile, from where we are now and stretching further down below, down to the lows of April in the 1971.68 area, we have the previously mentioned double bottom formed from late March and through April. We are inside this congestion. We also have the odd looking July 2019, well, say July 2021 based broken trend line, really, currently at 20.0533, which seems to be currently a curious and influential trend line. Looking at the recent action since mid-April, we have the possibility of two patterns: a lopsided cat's ears pattern and a possible descending triangle. More on these as they develop. So far today, a small move lower, away from the July 2021 based broken trend line, but not by much. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Tofpik and ADM Investor Services International Limited. And here comes the final bit.